A large trade in Dabur sees a little over 1% equity change hands for around 1,000 crore rupees. Promoters likely to have sold stake. The promoter group looks to sell over 5% stake in Sterling & Wilson's Solar via an offer for sale. The floor price for that has been set to 270 rupees a share. That's stock lower by almost 3%. IRB Infra, on the other hand, surges after the company announces that it will consider a stock split at its board meet on the 4th of January. Reliance Retail, promoter of Just Dial, will sell a 2% stake in the open market. This sale will be taking place to meet the minimum public shareholding norms.
Hello and welcome to Chartbusters. I'm Nigel D'Souza joining in from Mumbai, and Mangalam is joining in from Delhi. He's braved the fog, I believe, and managed to reach out there. Mangalam, stay safe, mate. I believe the weather is much better, but you can't see much. This is what I understand out there. So, we'll looking forward for you to come back.
I have been told that... I've been told that you can't see much, but then when you're in Delhi, you just eat whatever is in front of you without seeing it. That's something that I plan to do for whatever little time I'm here, man.
And you're not the kind of guy who'll be on a liquid diet, so you enjoy eating then. Well, let's get back to the markets. We are at a very, very crucial juncture, I would say, because we are at around that 18,220 to around 18,250. Now, yesterday we bounced off that 18,250 odd mark. So the bulls will actually like to creep back to that level and then see a bit of a bounce. For the time being, it's not looking very, very good because any kind of bounce is getting sold into. Maybe some clarity that comes in from Japan could stabilize. I think we have the governor that will be speaking out there in the next couple of hours. If there is some kind of clarity or some kind of calmness that comes to the global equities itself, then maybe we see a bit of a bounce. But till then, we'll have to wait by. But, we have Shilpa Raut who is standing by to run us through a quick technical check. Hi Shilpa, what's going to happen on the Nifty? What's your sense? Just looking at the screen, the bounces are getting sold into, but yesterday the dips are getting bought into. So at around 18,230, what's the call you're making?
Good morning, Nigel and Mangalam. Like rightly said, yesterday the dips were being bought into and today it is getting sold off. But Nifty will find support around 18,200 to 18,150 zones. I believe that, one can buy this dip again and put a tight stop loss of 18,150 on futures and go long from here. Likewise, Bank Nifty is holding 43,000 zones, so it is very, very concrete. There, a support is lying there. So with a stop loss of 42,900, one should also attempt to buy this dip in Bank Nifty.
All right, take that point. Buy the dip is what your call is. Of course, there is the 50-day moving average support, which comes in at around that 18,100 mark as well, were the Nifty to fall further. But this could be an important point to watch out for our markets. And as we speak, the put-call ratio too, early in the morning itself, has moved towards that 0.76 mark. Remember, around that 0.7 is where we usually see a bit of a bounce in the put-call ratio itself from. Shilpa, individual stocks, what's on your radar? Because now we have almost 1,800 stocks declining for just 1,000, which are advancing.
I would like to go a little contrary from here. I have a buy here in Chambal Fertilizers. It has come up from the day lows and it is trading above 300 marks. So it is actually now attempting to hold the support of 300 zones. So one should buy here with the stop loss of 295 and look for targets of 330. The other one is a sell call from Motherson. Motherson has been on the declining pattern from quite some time, and now trading below 70 is a clear indication that we will see some more dips towards 65 zones. So stop loss of 71.5. One should sell Motherson for targets of 65.
Okay, all right, Shilpa, thanks a lot for that. Well, let's shift focus then to our special segment where we get you a few ideas for profit from Money Control Pro. Lekha is standing by to run us through a stock that she's tracking rather closely. Lekha?
Yes, thanks. So we like Paradeep Phosphates, which is India's second largest private sector phosphatic fertilizer company. PPL's exposure in the complex segment is expected to do well, as non-urea fertilizers should outpace the overall industry growth. And NPK, that is complex, and DAP fertilizers should be the growth leaders, as the government is also promoting non-urea fertilizers. The company has security for raw material. The OCP group, which has about 70% of the global rock phosphate reserves, forms a part of the PPL's promoter group. and the company has long-term agreements with OCP for rock phosphates, a key raw material. The company is also backward integrated for its other key feedstocks as it manufactures phosphoric acid in-house. It has a sulfuric acid production plant and an ammonia production plant as well. The company is ramping up capacity with its recent Goa acquisition, which is expected to have a meaningful contribution in FY24 and will make PPL a much larger player. At current market price, PPL is trading at a PE of 9 times our FY24 projected earnings, which is at a steep discount to its closest peer. The stock is corrected about 15% from its 52-week high, and we think this stock should be on investors' radar for a long-term horizon. And any further consolidation can be used as a buying opportunity.
All right, Lekha, thanks a lot for that. So that's an idea for profit coming in from our colleagues at Money Control Pro. With that, we'll step into a short break, but you stay tuned because on the other side, we'll have the management of JTL Infra joining us to give us an outlook for the business of the company going ahead. Remember, the stock has rallied almost 56% in this year itself.
Welcome back here with us on Chartbusters. Well, as promised, let's get chatting with the management of GTL Industries. That's the pipes as well as tubes manufacturer. They are targeting to scale up their capacity to around 1 million tons odd by 2025. And also, today the stock is more or less flattish. But in 2022 so far, well, it's been up close to around 50%. However, there's no institutional holding, so we thought let's dig a little bit more and let's get in the management to explain what's going on with regard to its outlook from here on. Mr. Dhruv Singla, the director at the company, joins us. Hi Dhruv, thanks so much for joining in. Well, the first half of the year has been good, both for your shareholders as well as going by your financial performance. So give us a couple of details. What is the steady state EBITDA per ton we should look at from here? In the second quarter, it appears you had a higher amount of value-added sales. That's why it got a big bump up. But steady state EBITDA per ton, what should you look at? And also last year you did around 1.5 lakh tons of sales. For this year, what are you targeting?
Yeah. Hi, good morning, Nigel. Thanks for having me on the show. We are currently our steady state of EBITDA should be somewhere around 4,500 to 5,500. So the EBITDA essentially derives from the product mix that we are offering into the market. So, and as you explained in the last quarter, we had more than 55% of our products from value-added share of sales from our value-added products. So that is the reason that we had achieved a higher EBITDA margin. But going forward, the steady rate would be somewhere around 4,500 to 5,500 per ton. Last year, we did a volume of 1.5 lakh tons. This year, we are going forward to achieve a consolidated volume of around 275,000 tons.
Two lakh 75,000 tons is what you're saying, is that, or 225,000?
Yes.
Can you confirm that number?
Yes, 275,000 tons.
275,000.
Yes.
All right,
yes.
take that point. Just wanted to understand what exactly is your current capacity right now. You are looking to increase your overall capacity to 1 million tons. And how does that happen? Do you do it organically? Do you do it inorganically? I see an approval that you've gotten for amalgamating with Chetan Industries as well, which is the promoter entity. Can you explain to us how this ramp up happens?
Yes. So we currently are at a capacity of 500,000 tons, including Chetan Industries. 4 lakh tons is in JTL and 1 lakh tons is in Chetan Industries Limited. So by the end of this fiscal year, we are adding another 1 lakh tons in JTL itself with addition of 40,000 tons, including in the same for value-added products. That will be completed by the end of this fiscal year. So going forward, our plan to reach the 1 million mark is in the next 2 years, we'll be adding 2 lakh tons in fiscal year 24 and 2 lakh tons in fiscal year 25, from out of which 2 lakh tons would be of value-added products. So that is the plan to reach the 1 million mark.
You'll add 2 lakh tons in the next 2 years, and how much of that will be value-added?
2 lakh tons in the next year would be all the basic black pipes production.
Okay.
In the last year of FY25, we'll be adding 2 lakh tons, which will be the value-added product.
Okay, all right. So value-added composition as a percentage of sales is going to go up substantially then. In the past quarter, you said it was unusually high at around 55%, but going ahead, that's the focal point. Okay. You briefly mentioned about Chetan Industries. You're already including it in your capacity. Has that merger, been completed? Is it part of the entity as of now? So that's point number one. And also, since you have another capacity that's coming up, I believe that will help your exports, right? Exports, as of last count, are close to around 18% of sales. Where is that number headed?
Yeah. So to answer your question about Chetan Industries, it is with the second motion of the NCLT, Honorable NCLT. So by the end of this fiscal year, we are expecting it to be merged. It is currently, as the of date, it is not merged with JTL Industries Limited. But by the end of this fiscal year, we are seeing the approval of the proposal for the same. And the addition of the 2 lakh value addition by the end of 2025, we are seeing that our exports would gain momentum, and we would be trying to achieve somewhere around 25 to 26% of the entire kitty as export initiative from the company. Our Mangaon plant is basically an export-oriented unit from where we have gained momentum as compared to the previous years and doubled our exports already.
All right, so 25 to 26% exports by FY25 once your entire capex is done. Just wanted to understand, how are you going to fund this capex? It appears that you don't currently have debt on your books. And how much money are you allocating in terms of capex over the next couple of years? What does this mean in terms of additional revenue and margins? Because currently, like you said, value-added products were 55%. With more capex coming in, 25, 26% exports, what will your total value-added proportion be in the overall mix?
Yeah, so the capacities we are adding are 50% value-added and 50% the basic product. So going forward, by the end of 25 fiscal year, our value-added kitty would somewhere be around 45% of the total sales. Going forward, we are looking for a capex requirement of about 200 crores for the 4 lakh tons. That would majorly entail the requirement. As you said, we don't have debts on the book. We only have the working capital limits. So the majority of the capex would be funded from the internal accruals of the company itself.
200 crores for 4 lakh tons. Are we getting that correct?
Yes.
2 lakh. Okay. All right. Then, the other question I had, you're sounding very optimistic, Dhruv. But there is a promoter entity in there, Vijay Singla. He used to hold around 13 to 15% in the company. And as I see, it's come down to zilch. The entire promoter holding itself from close to around, it used to be 55%. Actually, prior to that, it was even 65, 70%. That's come down to sub 50%. Now, I'm aware that because of this merger you're doing with the promoter-related entity, the holding will go up a little bit. But for a company that's doing so well and the kind of guidance that you're giving, don't you think the promoter holding should be higher?
So the promoter holding with Mr. Vijay Singla that you were speaking about, that was not a sale, that was a transfer to his wife. So that is still in the promoter holding of the company. We recently had good interest from institutions and HNIs. So since there is no free float in the market, that's the reason there has been slight decrease in the promoter holding.
Okay. All right. So you're saying that Vijay Singla has transferred it to his wife. And you're saying institutions have shown interest. But as I see it, there's no institutional holding. So, or will that reflect in the time to come? Could you give us some clarity out there? And yet again, I'm asking you, the promoter holding is less than 50%. If you include that, the wife of this particular gentleman, then what would the holding go up to, and what is the ideal holding out there? Why isn't she categorized as the promoter?
So the ideal, after the merger has happened, the holding would increase to 58%. And currently, I don't know why in the public forum it's not there, but as per the internal records, it has been categorized as the promoter holding. But after the data I have with me is after the merger, the promoter holding will increase to 58%.
All right. Can you give us the name of, the promoter entity which you believe, the wife's name, which is now not classified as promoter entity?
It's Mrs. Nikita Singla.
Okay, we see that classified as promoter entity with 11.2% stake, which wasn't there earlier, but still the promoter's stake is sub 50%. But we take your point that it will go up to 58% once the merger comes by. What about the institutions bit? You've been speaking to institutions and HNIs. By when do we, expect that to be reflected in your shareholding?
Yes, you will see it. I think you will see it in the near future. We've had some stake being taken up from Kotak Life, ITI, Elara. So these are some institutions that are already being reflected.
All right, we take that point. And finally, just before we let you go, what exactly is your current market share right now? I believe the unorganized market is 55%. At what rate are both of them growing? What is your market share in that, and what do you target it to be?
Yeah, so the organized, you're correct, the organized and unorganized, it's about 55% is the unorganized. They're both growing at a steady state because of the product differentiation both of them have. In the organized market, our current the share would be somewhere around 8 to 10%. Since ERW pipe capacities are not a very widely researched area, so according to the industry research, we see that we stand somewhere around 8 to 10% currently.
8 to 10%. All right. And you all would be in what position in terms of market capacity from the organized part of it?
Yeah, 4 to 5 at the fourth number or the fifth number.
Fourth or fifth
in the industry.
Okay, all right, Dhruv. Thanks so much for stopping by. We thought we'll get you on to the channel so that we can understand your business. We found it a little, surprising that there's no institutional holding. But if you're saying that, we'll have to wait for the filing. But we look forward to chatting up with you in the future. For the time being, you're sounding optimistic on business. The promoter holding sub that 50%. For me, I don't like that too much. But as you clarified, it could go up to around 58%. Well, that's a stock more or less flattish as we speak. Though for this year, it's done pretty well. Slip into a short break. Come back. We'll continue our focus on the market. Stay with us.
Welcome back. You're watching us here on Chartbusters. Now, even as the market is meandering around the levels where it was at the start of the show, we do have a bunch of stocks which are surging from the broader markets. And most of them actually belong to the consumer space. Bata, for instance, had opened lower and now has recovered about 2% from the lows as into the green. The other one is Marico, which too has recovered about 1.5% from the lows. Remember, the FMCG pack was doing well in yesterday's trading session as well. And Dabur too, despite the large trade that took place this morning, the stock is holding with a cut of about just under 2%. It has recovered about 1.5% from the lows. So participants, namely the buyers in that large trade, will be extremely important to watch. Go below the FNO radar. You have a bunch of these textile stocks. They're surging. Arvind Fashions up 5.5%. We have Himmat Singha Said, which is up around 6.5% as well. And PSP Projects has seen a gain of almost 6%. This even as we get flashes at the bottom of your screen that Capacity Infra has won an order. But by and large, we are still holding around levels where we were at the start of the show at an index level. Nigel.
All right, Mangalam. Well, on that note, though, I think we'll have to wrap up on this edition of Chartbusters. Mangalam from Delhi, myself from Mumbai. You stay tuned. Trading Hour will come to you live from Mumbai itself.